It's very hard to find anything undervalued anymore in markets that we're both bullish on, but the stock market is just roaringly bearish in terms of overvaluation, over speculation, and primed for at least a hard correction minimally and a bigger fall. But where I think the bigger problem is, Steve, we're not alone with canaries in mines.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Today we have Peter Grandich, leading expert in the financial and commodities markets. Peter is a seasoned pro with over 4 decades of experience. He's an investor and speculator in junior mining stocks. Today we're going to be talking macroeconomics, precious metals, copper, and when to take profits. Peter, thank you for coming back on the show.
Always a pleasure to speak to you, Steve.
Yes, sir. I enjoy our talks. So pleasure is on this side of the table as well, sir. Let's start out like we always do. And what is your macro view of the world economy and financial markets today?
Well, I just told you before we started recording, I've been talking for several weeks and finally at a major time. I didn't begin the year looking for a stock market crash or a hard fall. My view to our planning group was we were going to be on either side of even. However, in late August, things started to really look gloomy, and I said, we're going to get to the point where I might want to go short. So what did I do today? The Dow's up a few hundred points. I see the exchange traded fund I want to buy. So, maybe I'll go a little cheaper. Let me put it in 10 cents below where I want it. Steve, it almost printed at the exact high when I put my tickets and we're gone. And the reason I just tell you that story is because I'm really bearish. I mean, it's very hard to find anything undervalued anymore in markets that we're both bullish on. But the stock market is just roaringly bearish in terms of overvaluation, over speculation, and primed for at least a hard correction minimally and a bigger fall. But where I think the bigger problem is, Steve, we're not alone with canaries in mines. We're looking around the world. We're seeing several bond markets seeing substantial rises in rates. We're seeing a lot of geopolitical issues. We're seeing the economy here a lot weaker than the rah, rah, rah that comes out of the White House. And so overall, I would just say that this is a time to be of extreme caution, or an old slogan that I like to use. It's good to be a live chicken versus a dead duck.
I'm going to quote you in one of your recent emails. You said, I do believe capital preservation must overwhelm capital appreciation positions because corporate bond yields are now so close to treasury bond yields. I don't wish to own any. I suspect such a view is rarer than finding a needle in a haystack, but I have never been more adamant in needing to personally be a live chicken versus a dead duck. This brought up something because would you consider buying puts on corporate bonds? Is that something you would do?
No, so I wear two hats. A lot of people in recent years because of getting back into the metals and mining, but I've been involved in a uh, financial planning group at over $1 billion under management here in New Jersey. And one of the things that we look at, obviously, especially for retirees, is income-oriented products. The corporate bonds now have been so overbought, and that's because people have been chasing yield, that the spread between them and treasuries themselves have become so minute, and the risk that corporate bonds have more than the treasuries just suggested to me that we don't want to look at corporate bonds for income at this point. Not that I think there's going to be a big collapse and you can make money on the short side. I think the other issue that isn't being spoken much about all is the competition now for our bond market in general here because of how rates are shooting up in places of the world where we had a big discretion difference between them. So I think overall the bond market is still the lesser of two evils in my book, but I think it's something that people need to look at more than they do. I think people overemphasize the stock market and underemphasize the bond market and how much influence it can have in our daily lives.
Okay. All right. Okay. Um, Moving on to listener questions. Darren wants to know, I'm going to share my screen here. And what this chart is, I pulled this up before and he says, you detailed on a chart Fed cuts and miners accurately dropping in step with cuts until the Fed stopped cutting and then the miners skyrocketed after the cutting stopped. Can you go over this with Peter? So basically right here, the blue is the Fed funds rate. So this is the '08, um, uh, or I'm sorry, this is 2007 when the Fed started cutting rates, right? And to 2008, they basically went from 5% down to zero, right? As the Fed started cutting rates here, the miners, this is ASA. So I could put GDX up here. You wouldn't be able to tell the difference between the charts. This one just goes back further. But basically, he's talking about how as the Fed's cutting rates, shortly after they're done, gold miners skyrocketed. And then if we go over here, you have a little bit of a blip of that here when they're done cutting rates, and then gold miners went up. And this is kind of where we are now today. Do you glean anything from this chart? Do you have any insight? What are your thoughts?
Well, I think it's more than just coincidental. I don't think it's a raving reason that to own miners or to sell miners. I think the uniqueness in the mining industry now, somewheres where I spent 25 years in a row as my main source, it's secondary to the planning business that I have now. But the concern I would have more about mining now is A, where can they mine versus where they were able to, and how much money and risk more that miners have to take in order to fulfill this abnormal amount of metals that are going to be needed. So maybe a combination of that and charts like this could bring somebody to decide whether or not to buy or sell mining stocks. For me, Steve, and God bless you if it works for you, that's not something that would make me make a final decision on being long or short mining stocks.
Okay. My thought was maybe it has a lot less to do with the Fed funds rate and more to do with the economy's having a bad time when they're rapidly cutting like that. And
Yeah,
that may
and
be more of
especially
a,
the base metal companies back then, when there was ample supply of metals, sure, they would go lower because economy's getting weaker, metals are going to come into the market, miners won't do well. That argument is a worthy argument.
yeah, okay. Okay. All right. Thanks for bringing that up, Darren. And Stefan wants to know, I notice you like gold copper mines. Any thoughts on gold antimony mines or gold and tungsten mines?
Well, it's funny you say that because my single largest investment is in a company called Northern Superior Resources, which owns 50% of a company called OnGold Resources, who just a couple of weeks ago announced just tremendous tungsten interest because of looking at tons of core that never was looked for in the past, and they found all this tungsten. I didn't even know what tungsten was selling for when they told me, Steve. But the fact that they had so much and there's such a great need for it now. So yes, I would say to that person, I'm now interested in that because I've learned how important it is and how much like 90% of it comes out of China. So I guess
Oh.
tungsten outside of China is something to look at. And obviously a company like OnGo Resources, which I don't own because the company I own a lot owns 50% of the company. But obviously I think he's on to something about tungsten. I don't know really anything about the other metal that he spoke about.
Antimony. Okay. That's interesting. I did not know that about tungsten. That's kind of like, it sounds like it falls into like the rare earth category.
It does. It does. And like I said, in the years when I was even a money manager, I don't ever remember sitting and talking about tungsten. But here we are.
Okay. Tungsten. I'll have to put that one on the radar. All right. He's also asking about the gold to copper ratio. How do you see this with fear versus industrial slowdown? Also, gold to silver ratio of 90 when central banks are buying like crazy. As Vince Lancy commented, shows silver has been strong. And how? Let me pull up the gold to copper ratio here, and then that we'll start with that one. Do you see anything? Okay, so and then I'll make this a line chart, and boom. Okay, so the blue is the gold to copper ratio. And we'll bring it out here on the weekly, going way back. So this is going back to 1988.
So I will just tell you, Steve, I've never been a big proponent of the ratios in general. I've known that the gold silver ratio was often talking about, and it was more talked about the silver believers because silver underperformed gold for so long. And then, of course, early in this year, it actually made me become a silver bull. So when silver broke under 30 and the ratio was getting near 100, even though I wasn't a big ratio guy, I said they are right. There's too much of a discrepancy here. Silver's got to be bought now on the same level as gold. So for that reason, the gold copper, I don't think that's as fair as one. Gold and silver, because they're both metals. Copper is still a base metal. It's not a precious metal, even though there's a much greater argument on a supply demand now than it was 10 or 20 years ago. And of course, what's happening with gold and the extremely bullishness that I know both you and I've had for quite a while, I wouldn't worry too much of that ratio. And I think the gold silver ratio, I'll just put it this way. I think silver can get to 100 and I think gold can get to 5,000. Now, whatever that ratio is, you know,
50 to 1.
they're still going to go higher over a period of time, in my view. And I've learned one thing now in my 42nd year. Direction is the most important thing. If you can get that right, exactly where you end up in that direction isn't as half as important having the right direction.
Okay. All right. So you're not paying too much attention to the gold to copper ratio at although gold to silver, I can see that because they can both be monetary metals.
Yeah.
Copper, no one's using that really for money, or at least not in any penny since 1982. So that's not one that you would really put too much thought into. Okay. Blaine has an interesting question. You got a big fan. He's asking, when you take money off the table, do you reallocate into cash, into bullion, major producers, or plow it back into other juniors?
Well, I had a come to Jesus meeting with the most important client of mine called my wife the other day, and she made me take things off the table because I'm tend not to take off the table. I'm a gambler. Now, we created a word decades ago on Wall Street not to say we're a gambler, we say we're a speculator. But speculating and gambling is the same thing. You got to be prepared mentally and financially to lose part of all your capital. Uh, I'm Riverboat Pete. That's a self-appointed name that I gave myself a couple of decades ago. And even though I've gotten older, I'm still the same Riverboat Pete that I was 20 or 30 years ago. So I don't have too much into asset allocation. I tell you what I am against. Sometimes the planning group partners wish, Peter, you weren't, but I don't believe in this cookie cutter stuff, 60-40, be 30 here, 20 there. I meet husbands and wives that are dramatically different, yet you're investing them as a group, let alone no two people are the same. Are there big picture items that people can fit into? Yes, but the cookie cutter kind of stuff, I don't. And so I'm not a market timer. You know, Jimmy Dines, who you never got to meet, I think was one of the three best newsletter writers there ever was, and one of the most colorful, enjoyable speakers there ever was. He used to say, Mark, timing is everything. Think of the poor guy that invented preparation G. And what he used to say that about is just when you try to time, if you're a little bit too early or especially too late, all the timing doesn't mean anything. So I don't try to time things either. And I've met very few successful market timers. I don't even need a calculator to calculate all the ones that existed. So to answer him is no, I don't get too much into reallocation and all that stuff. I kind of go with my general picture and then what looks like should work the best in that.
Okay, it sounds like you're saying basically if something's cheap, you buy it, and if you think it's expensive, then you let it go.
Yeah, you know, one of the biggest complaints, Steve, over the years that you've heard from investors in general, not really directed at me, but you would hear it all the time is, hey, how come you guys and gals on Wall Street always tell us when to buy, but you never tell us when to sell? That was a classic line we heard for a long time. My response was always a very simplistic one, but I thought was most appropriate is if you can't first buy it at this point in time, maybe you got to think about selling because who do you expect to not only buy it, but pay a lot higher so you can make money? Those are more important things to me than what allocation should be in what area at this point.
Okay, all right. Um, he's also got a follow-up about maybe just kind of brush over these two companies, Northern Superior, North Isle. Oh, I'm sorry, three companies, Northern Superior, North Isle, and Radisson. You already hit on one.
Well, those are the three holdings that I have now. That was part of the come to Jesus decision. My wife said, okay, you're going to put X amount of dollars over here now that we've gotten it back, and I don't want to lose it for a third time in our marriage. And what you can leave on this side is what you would want to call your speculating cash gambling. And those are the three main stocks that I own right now. So obviously, I'm extremely bullish on them. All three are holes. If someone was first looking at them today, I wouldn't buy anymore, but I have the luxury of owning them a lot lower. But over a longer period of time, I believe all three in the next 12 to 24 months can be takeover candidates.
Okay. Are there any that are on your radar right now that you're looking at?
Yeah, but like I said, there's nothing cheap anymore. No matter where you look, uh, yeah, there is one that got so crushed and I was so killed in it. And if management changed tomorrow, I beg my wife for money to buy it. But unless that happens, I wouldn't be touching that company right now. But it's very hard to find things undervalued now in all the different sectors you can look at. That's the other concern about I have about, the concern that the stock market and things like cryptocurrencies are just too high now and need to correct at least, if not have a bear market.
Yeah, I'm getting more and more questions now than I think I ever have since I started this show on what gold and silver miners to buy. And I can't really recommend anything because they've all run so much. And I'm trying to find cheap assets. And the cheapest stuff I'm coming across right now is nickel and coal. And that's oil stocks too. I think they're relatively cheap, although they'll probably get cheaper. But do you have anything like that? You mentioned tungsten before.
Yeah, there's probably still, like you said, I know nickel is, has really underperformed quite a while, and there'll be people many times when you start to see markets like that move, it's because people run out of the good things. So they're trying to figure out what hasn't moved yet. Remember, the stock market has really existed on the opposite, and that's these momentum players who don't mind paying up for something 300% because they think it can still go up another 300%. But in terms of pure valuation, it's hard to justify any sector now as complete undervalued as a whole.
Yeah. Okay. Okay. So your basic strategy, as I'm hearing, is you're playing a lot more defense right now than you are offense.
Yeah, you know what? And just not playing. And that's the toughest thing for people because in all of us, I shouldn't say all of us, most people listening to this program, there's a percentage of a gambler in us. Some may only be 1 or 2%. Some may be Riverboat Pete 80, 90%. And it's very hard for a gambler to do nothing. That's why even on Sunday, they might not want to bet the latest game, but I lost the 1 o'clock games. I lost the 4 o'clock games. I don't want to go to sleep being a loser. Let me bet. See, they're just betting for the sake of betting. And that's what you'd be doing now. You wouldn't be betting because you think things are undervalued. You'd be betting to have action. And believe it or not, the stock market and things is another area. It's a very high-tech casino now, but for a lot of people, it's become just another type of casino where they can make bets, especially now with things like cryptocurrencies, which you can trade 24/7. So.
Yeah. Yeah. Or the futures market and all that. Yes. Well, thank you very much, Peter. Any final thoughts?
Well, like I just said, I think this is a time, certainly now, to reanalyze and start to think, what can motivate things to go a lot higher from here? Uh, there's nothing historically that you can look at markets and point. The value player has had a very tough time now, near impossible to go out and be a buyer of that. Now there'll be the new year, the stocks that perform bad, the reversal plays and all. But I think you're going to have to be willing to put cash, try to build some cash. And if there is going to be a hard correction or worse, a hard fall or even a crash, be in a position. Because what normally happens, and I've gone through three of them, we kick ourselves and go, man, I knew I should have sold because look how cheap these things are. But you don't think it can happen. But they almost always do. And I think we're in for another one, whether it's one day from now, 1 week, 1 month, or even a year. But we're going to have another crisis, unfortunately. And that's when you want to have purchasing power, being able to buy stuff.
Yeah. Yeah. For what it's worth, I'm seeing the same thing on the charts. I mean, it's just 7, 8 weeks of green candles, gaps up. I mean, nothing moves in a straight line, and eventually it's got to have some kind of breather.
And we all think we're real smart at that point. Oh, man, look how great I'm doing. And then, out of the blue, something happens.
Yep. When everyone's winning and everyone's making money, it's probably the time to take some chips off the table. Peter, thank you very much. Where can viewers follow you and find your work?
The best is on X, there's a Peter Grandich page. If people are in the US and they're interested in our planning business, they can go to petergrandich.com to learn more about it there.
Okay, we'll put links down in the show notes. Peter, thank you for coming back on the show.
Always truly a pleasure to speak to you, Steve. God bless.
And thank you for tuning in. Go to stevebartonmoney.com for more and have a wonderful day.